So I recently came across a movie called The Big Short, and I found it quite interesting. And so today I'll go over it. And so it's basically about the 2008 financial crisis, where which happened mainly due to the false evaluations of the MBS. And I found it quite interesting. And so basically in the beginning, there's this person who's a doctor, and um, he's actually in head of a fund, and he eventually finds out that um, that the MBS evaluation is actually false and that the economy is going to collapse. And so he tries to make some money off it by going to different banks and sort of betting against the MBS. And a lot of people found him as sort of to be stupid because the MBS looked like they were going so well at the time. And so even his investors began to sort of ridicule him and like wanted their money back. But he also had to spend money to keep for their premium sort of for the premium of the bank, because he had to sort of until what he said was really true. So yeah, he was actually losing a lot of money, which a lot of people thought he was quite stupid for. And then this next person, so he basically um, is with his is with his other three colleagues, and he basically comes across this person who also happens to find out that the economic situation isn't very good because of the MBS. And so he sort of convinces him and his three colleagues about it, and they sort of go and double check. And so the reason is actually because the banks were giving away loans too easily. So if you think about it, in the UK right now, you have to give about a 25% down payment for a loan, and you also have to have like the right credentials as well, and sort of a backing check. However, then it was only about 5% or even nothing, and you didn't really even have to have any sort of credentials. And so people without like any money could just receive as much loans as they want. So they even found that out that a house had been bought under the owner's dog's name. And so yeah, it sort of just shows how easily the loans were given. And it was actually mainly because of the banks wanted to make more money, and so they didn't really care about who they were giving the loans to, but they just wanted to make a lot of money. And basically the way it works is that the banks would sort of pass down the loans to investment banks to sort of split it up into securities, and then in the process also give it to rating agencies, so that they would sort of rating agencies. But a lot of these ratings were often false because the rating agencies wanted to, like, if the rating agencies didn't give a good rating, then the banks would just go to another agency, and so they basically just had to give a good review, otherwise they'd lose business. And so and these ratings are actually really important. If you think about it, if you're going to watch a movie with your family, you look at the reviews first to see if it's going to be good or not. And sort of it's basically where people saw that the reviews were very good for the MBS that they wanted to buy and buy buy them. And then this person, and he sort of was helping two young men who also had their own fund, and they also found out that the economy was going quite bad and the MBS were going down. And so yeah and so he helped the two boys to sort of bet against the banks as well. And initially the two boys had a 30 million dollar hedge fund dollar fund, and it was actually quite a lot, but they needed 1.6 billion to get sort of expand their business, and they didn't really have that, so they were trying to take a chance with trying to increase the amount their fund was worth. And even though they were ridiculed, eventually it began to pay off. And so this person who sort of found out at the start he had a 400, almost 500% percent increase in his initial payment, and he managed to earn about 6 billion back. And this person here, he earned 1 billion for between all his colleagues, and so he basically earned 250 for himself, and he earned 500 million, and he helped the two boys earn 80 million, which is quite a step up from their 30 million before. So you can see that all of them had quite big improvements. And I think the main points to take away from this video are, firstly, um, I think it's sort of the importance of what makes money more, sort of having a good, like sort of knowing what people want, or knowing or sort of knowing something first. So say for example, if there was an apple and people really wanted to buy it, it's not really about knowing that the apple is rotten first, but more about that people still want to buy it, and knowing how to make money off the foolish people. Second, I think that is that poor people and sort of the lower class to middle class people always suffer the most, because sort of the high ranking people didn't really get any punishments, and at the end of the movie it said that only one like high ranking banker was put into jail, even though there was so much fraud and stuff like that. Even though, yeah, it was them who caused the problem, it was the low ranking people. I mean, not sort of like the low class people who suffered the most, with about 6 million people losing jobs. Actually, 8 million people losing jobs, and probably a lot more homes lost as well. I also found that you can't really agree with what everybody thinks. So everyone thought that the MBS were going really well and that nothing bad would happen. However, if everyone thought in the same way, then no one would really be able to see it coming. And so these people all thought differently and managed to make quite a lot of profits. Yeah, I think that's all, and I hope you learned something from this. I would also recommend this movie to you as well, because I find it quite interesting. Thank you for listening.